Ladies and gentlemen, Kekim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 0.47% there. On the S&P Nasdaq 1.09%, semiconductor 0.8, Dow negative, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are seemingly green today. Bitcoin down, gold, silver miners are also dollar down, oil down, treasury bond up. The rates are down. VIX is down about 5%. There, let's stick with S&P 500 ETF. Spider! 65-minute chart. Here's so this is what we closed yesterday. And looks like we actually saw a gap up this morning here. And that gap up actually was a pretty decent size. Not only that, we actually had the down gap. It actually gapped above the down gap, which we talked about in the last night's video. If they could have held this gap, we might have had another island gap to add to the arsenal that the buyers been gathering. They already got the May island up gap here from last week or so. If this gap would have been held, that would have been another island gap. Well, unfortunately, for the buyers, that gap got faded and totally filled on the second hour here. Each day I'm gonna pick a good comment for each video, and I want to kind of display. Here's Chris here. Bears will be gapped tomorrow, and that's exactly what happened this morning. And the Thomas C said, does that mean good for the bulls or most excellent for bulls? Well, you know, if that gap would have been sustained, yes, that would have been very much most excellent for bulls. However, the gap wasn't sustained. That gap got filled. That island gap was there for when it was opened. And I think what happened was, though, you can see on the first hour, when bulls got up there and trying to go after this gap, just not enough I guess, you know, momentum to carry that through, filling this down gap. Nonetheless, bulls did go ahead and fill this down gap with the gap up today. You can see on the second hour, we brought, you know, market came back down, long, lower here. You can see on the short-term moving average, trying to find some support. We lost that short-term. However, the mid-term and the long-term, and you can see the that lower wick here got bears actually came down and threatened the May island up gap. And obviously this is something I've been talking about for days. This is the gap, this up gap, this island up gap is the up gap that bulls must protect. And thankfully though, you can see the midterm, right? The moving average there, the midterm moving average and the long-term moving average, they're both there to protect it. Bulls are making sure that they can't come any lower, and we were able to, buyers were able to protect and utilize midterm and long-term as new support there. Perfect. Got above short-term, and we did close slightly above the micro-term. So going into tomorrow, it looks as though bulls are, as long as if you can stay above 411.50 or so, I think the first couple hours, I think there's a good chance bulls are going after to fill this down gap. Perfect. Again, they filled this down gap from yesterday, so that's a good sign. And I think that made a way for the bulls kind of gap come back up here. And next level is gonna be this down gap at 415 or so. And also, I think just from looking at the you know, just the posture of this price section, we might have what it looks to be inverted head and shoulders here, right? So if you look at this as a left shoulder, inverted left shoulder, and there's a head, and that's the right shoulder, and we can draw the neckline something like this right here. So that will be the neckline. Keep in mind though, we do have the down gap just right above it. So it technically, we really do need to not only just get slightly above the neckline, you need to fully fill that and then stay above this. I mean, you can come slightly lower, but we need to kind of continue to cultivate that higher low. If you call this as the low, the head here, and the right shoulder becoming that higher low, we need that third higher low if the bulls want to go after that February and May peak at 417.43. Let's check out that oscillator. As you can see, and this is precisely what I've covered yesterday, right? Getting that oscillator crossed up prematurely, not letting that oscillator come all the way to the bottom of his band. So when that oscillator crossed up here, but you can see, as you can see, we have not gotten below or beneath this dotted line or in the extreme oversold level. Instead, prematurely, that oscillator has been crossed up here, and that's what I comprehensively cover on the last night's analysis, that if this happens today, it's gonna favor the buyers, because when you see that the buyers or the sellers are not putting that oscillator to the all the way to the bottom of his band, it is actually showing weakness, some sort of whipsawing action like this, because we've seen that before, where we initially see the oscillator cross and then it crosses back down and we see another downturn. That's what bulls need to avoid, and that's what bears are looking for, right? Having that oscillator cross right back down and then price coming right back down to retest at 408, and having this down gap continues to act as resistance right here at 450. And again, this down gap is not a big down gap. They should do it as early as, so the longer this little down gap at 415 is open, the more likely bears are gonna try to come down and fill this island up here. I'm gonna come back for you. We'll reassess the situation. Asian injury evening globe trading tomorrow.